Hello friends, I welcome you to the next lecture on Indas20. So we are going to discuss Indas20, which corresponds to International Accounting Standard 20 Government Grants. In this lecture we are going to discuss about the scope of the standard. We will try to understand the meaning of the term government, government assistant, government grant, what is included within the standard, what is not within the scope of the standard, exclusions, recognition principles. So when can we recognize government grant in our books of account as income or as a liability, when should we recognize it? Disclosures. What are the disclosures required by the standard? We are going to discuss them in this lecture. Okay, let's get started. Now, we'll start with meaning of the term government. As per the standard, government refers to government agencies and similar bodies, whether local, national and international. That means even municipalities will be covered by, municipal organizations, municipal corporations will also be covered by this term, because it's a local government body. National or international organizations, so if you get a grant from an international government body, then again that is also going to be covered by this standard. Okay. Next, government assistance. What is government assistance? It is an action by the government which intends to provide some economic benefits to a specific entity or to a range of entities which qualify, which satisfy some qualifying criteria. So that means it is an action by the government. The purpose of the action is to provide some economic benefits to a specific entity or to a range of entities which qualify certain conditions. Okay, so that is called as government assistance as per the standard. Now, what is government grants? Government grants are government assistance. It is assistance given by the government, but it is in the form of transfer of resources by the government to the entity, and this transfer of resource takes place. Resource can be cash or it can be some assets as well. Okay. And this transfer of resources is given by the government to the entity for either past compliance with certain conditions or for future compliance with certain conditions, and these conditions pertain to the operating activities of the entity. That means there are some conditions laid down relating to the operating activities of the entity. These conditions might have been fulfilled in the past or they are going to be fulfilled in the future, and for such fulfillment of conditions the government is going to give you a grant, and the grant is in the form of transfer of resources from the government to the entity. Resource can be cash or it can be some non-monetary assets as well. Okay, so the government is saying, boss, I'll give you a resource, you please comply with certain conditions relating to your operating activities. These conditions have been either fulfilled in the past or they are going to be fulfilled in the future. So such grants are going to be covered by the standard. Okay. Now, what is the scope of the standard? The standard shall be applied in accounting for and disclosure of government grants or the disclosure of other forms of government assistance. So we are going to deal with accounting for government grants, disclosure of government grants or other forms of assistance which is provided by the government. So this is the scope of the standard. Okay. Next, what is not a government grant? We'll first try to learn the forms of government assistance, or we can say these are some benefits from the government which are not considered as government grants. There can be other situations as well where the government may be providing you benefits but which are not covered by the term government grants as per the standard. Let us see one by one. Tax benefits like income tax holidays, accelerated rate of depreciation, investment tax credit. These benefits are not within the scope of this standard, and we can say that tax benefits are provided by the government are not considered as government grant, because the definition of the government grant includes transfer of resources. Here there is no transfer of resources taking place from the government to the entity. So it is a tax holiday provided to all entities or to a range of entities which satisfy certain conditions, but it is not a transfer of resource by the government to the entity. Okay. Next, government participation in the ownership of the entity. That means sometimes the government can be a major shareholder in the entity. So government is participating in the ownership of the entity. Government controlled entities, government introduces some capital. It's a resource transferred by the government to the entity, but it is outside the scope of this standard. Next, government grants covered by Indas41 agriculture. In our earlier lectures we have discussed government grants relating to agriculture. Grants provided to an entity to engage in a specific type of agriculture activity in a specific region. How to deal with it is covered by Indas41. Government grant given to an entity not to get involved in certain types of agriculture activity in a certain location. So such grants which are given relating to agriculture activity, such grants are covered by Indas41. Okay. Grants relating to biological assets which are measured at fair value less cost to sell. How to do accounting is covered by Indas41. But if government grant is given to an entity which is doing agricultural activity, but the grant relates to a biological asset which is carried at cost less accumulated depreciation, then again it is covered by Indas 20. So grants relating to biological assets which are measured at fair value less cost to sell, how to do accounting is covered by Indas 41. Grants not to do agriculture in a specific area for a specific period of time, grants to specifically do agriculture in a specific area for a specific period of time, how to deal with these type of grants is covered by Indas 41, not by this standard. Okay. Grant relating agriculture activity which is covered by the standard is, suppose an entity which is carrying on agriculture activity, one of its biological assets is not measured at fair value less cost to sell. The biological asset is measured at cost less depreciation and accumulated impairment losses. That means we are not following the fair value model which is used by Indas 41, we are following the cost model. Relating to that biological asset, if the entity receives a government grant, accounting for such grants is covered by this standard, okay, but not by Indas 41. But grants relating to biological assets which are measured at fair value less cost to sell, if grant is received, accounting is prescribed under Indas 41, not by Indas 20. Okay. Next, they exclude also those forms of government grants which cannot reasonably have a value placed upon them. So there can be some assistance which is provided by the government which you cannot value. It is very difficult to value them. Examples are also given in the standard. Free technical advice given by the government, free marketing advice given by the government, or the government gives guarantee to your organization. You have got a contract and the contractee requires guarantee. The government steps in and says, boss, we will guarantee on behalf of the entity. In such cases, it is very difficult to place value on these kinds of assistance from the government, hence it is outside the scope of this standard. Okay. Or when you enter into transactions with the government, these transactions cannot be separated from the transactions in the ordinary course of your business. That means there is no difference between the transactions which you enter in your ordinary course of business and certain transactions which you do with the government. So the transactions you are entering in the government are the transaction which you normally do in your day-to-day business activities. In such cases, it is difficult to separate, it is difficult to find out the amount of government, we can say the benefit which is the government is providing to you. I can give an example to understand this point. Suppose the government has entered into a contract to acquire a portion of our output. We are producing certain good, government has agreed to acquire a portion of our output. Okay. In such cases, we normally sell goods to outsiders. Similarly, we are also selling goods to the government. In such cases, it is not considered as a government grant. See, definitely there will be some benefits in these kind of transactions, but it is difficult to distinguish the benefit between the benefit which you are getting because of doing a normal business transaction and the additional benefit which you are getting because of dealing with the government. It is difficult to distinguish the benefit. Hence, the standard says we are not going to ask you to separate the benefit which you are getting from the transaction with the government. Hence, this is outside the scope of the standard. So, if you are going to sell goods to the government, in such cases, if you are getting certain additional benefits by dealing with the government, you need not try to identify what is additional benefit which I am getting by supplying goods to the government and trying to recognize it as a government grant. Standard does not require it, and the standard has a logic behind it. It is difficult to find a breakup. Hence, it is better you don't try to find a breakup and you recognize the transaction as a normal sale transaction and don't try to recognize any government grants. Okay. So when you enter into a transaction with the government, and these are transactions which you enter in a normal course of business, in such transactions you need not try to identify any additional benefit which you are getting from the government as government grants. Okay. So this is also outside the scope of the standard. Next, indirect benefits. Sometimes the government is going to provide indirect benefits, and these benefits are normally not available to a specific entity. They may be available to the whole community. Example, improvement in trading conditions, putting some restrictions on your competitor from dealing. If he's doing some unfair practices, the government can stop your competitor from doing such unfair practices. The government can provide you improved infrastructure, irrigation facilities, better transportation, telecommunication network, etc. So these benefits indirectly benefit all entities. It is not specifically provided to an entity, and the benefits are available to the whole community. So such indirect benefits which benefit the entity are not going to be covered as government grants within the scope of this standard. Okay. Next, recognition principles. When can I recognize government grant in my books of account? Whether I should recognize it as an income, whether I should recognize it as a liability, when should I recognize government grant in my books of account is the question. Standard says if two conditions are fulfilled, you can recognize the government grant in your books of account. There should be reasonable assurance that the conditions which are attached to the government grant will be fulfilled. So there should be reasonable assurance that the conditions which are attached to the government grant will be fulfilled. Second, the grant would be received. When these two conditions are satisfied, you can recognize government grant in your books of account. Recognize means you can pass an entry for government grant in your books of account either as an income or as a deferred income or as a liability. Okay. So only when these two conditions, that is, you should be reasonably sure that condition would be fulfilled. Second, the amount would be received. Okay. Sometimes the government grant is already received. So just because you have received the government grant, that does not mean that you have already fulfilled the condition or you will surely fulfill the conditions in the future. Just because you have received the government grant, it doesn't mean that it has become income for you. Till the day you fulfill your conditions, till that event happens, the day you fulfill your condition, then you can say it is your income. Just because you have received cash doesn't mean that you have fulfilled the conditions or you have fulfilled the conditions in the past. Okay. If you have failed to fulfill the condition, the government can become refundable as well. So you have to be careful. Okay. Next, the manner in which a grant is received does not affect the accounting method to be adopted in regard to the grant. Sometimes the government grant can be achieved in various ways. Sometimes the government grant can be cash, or the government grant can be transfer of a non-monetary asset which we value at fair value. Or sometimes the government can say, boss, you have a loan which you have to repay to the government, we will give you the government in the form of reduction of that liability. We have to repay a loan to the government. We have taken a loan from the government, we have some obligation towards the government. Government says we will give you a grant, and the grant is in the favor of, in the form of reduction of that liability. So whether you receive grant directly in the form of cash or indirectly in the form of extinguishment of liability, such distinction, we can say the grants can be given in different ways. Just because the grants are given in different ways doesn't mean that you are going to adopt different accounting methods. Accounting method will not depend upon how you are getting the grant, whether it is in the cash or whether it is in the form of reduction of liability. Accounting is not going to change. That is what we want to tell here. Next, contingent liability and asset. See, I have received a government grant, and we know that if conditions are not fulfilled in the future, the grant becomes refundable. That means it can be a contingent liability. So how to deal with contingent liabilities or assets relating to government grant is prescribed under Indas 37. This standard is not going to apply. So if there are any contingent liabilities relating to government grants or contingent assets related to government grant, how to measure them, how to disclose them, what are the disclosures required, this is covered by Indas 37. This standard is not going to apply. Okay. Next, approaches to accounting. Let us suppose the recognition principles are met. How to do accounting for government grant in our books of account? We are receiving some government, we are receiving some resources. The resource can be cash or it can be non-monetary assets. So when I receive these resources, I will debit cash or I will debit asset. I will credit government grant. So whether this government grant, which is showing a credit balance, should it be credited to P&L account immediately, or should it be recognized in P&L account over a period of time, or should it be credited directly to owner's interest, should it be directly credited to equity, is the various alternatives available for doing accounting for government grants. So there can be various alternatives. Immediately recognize it as income. Second is recognize it as income over a period of time, over number of years. Third, you can directly credit it to equity. So which approach should I follow? There are two approaches generally, the capital approach. And capital approach means outside P&L. That means government grant is not going to touch P&L. It is going to be directly going into reserves, directly going into balance sheet as part of equity. Okay. Second is the income approach, where the government grant is going to be recognized as income into P&L account over one or more periods in which the conditions for the government grant has to be satisfied. Okay. So there can be two approaches. Let us see what are the arguments in favor of each approach. Now under capital approach, when we receive government grant, it will be taken to equity directly. It will become part of reserves directly. It will not transfer it to P&L account. There are some people who argue in favor of following the capital approach. Let us see their arguments. First, the government grants are financing device. According to them, government grant is a way of getting finance for the company, hence it should be part of equity. Okay, and generally these are not repayable. Normally government grants are not repayable, hence they feel that it is a financing device. It's a source of finance, hence it should be shown in balance sheet as part of reserves. Okay, and the other argument which they give is they are not earned. Okay, and represents an incentive from the government. So you don't earn the government grants, it is like an incentive given by the government. Hence it should not be credited to P&L account. Whatever we earn, we credit to P&L account. According to some people, that government grant is not earned, hence it should be credited to reserves directly instead of crediting it to P&L account. So these are the arguments in favor of the capital approach. Let us see the other arguments as well. the arguments in favor of the income approach. Now, under income approach, once you receive government grant, it is credited to government grant, we treat it as deferred income, and gradually the deferred income is released to P&L account in the proportion in which expenses related to cost incurred to satisfy the conditions are debited to P&L account. So government grants come with some cost attached to it. So we have to incur some cost to get government grants. And when related expense, when cost is incurred, related expense will be debited to P&L account. So in the proportion of expenses debited to P&L account, we have to amortize government grant also as income in P&L account. Okay. So this is called as the income approach. Now what are the arguments in favor of the income approach? There are people who say that government grants are rarely gracious. So there is no gratitude. We can say there is government grant is not given for free. You have to incur some cost. So it's not for free. That is what the people want to argue. And you have to incur some cost. And when related expenses are debited to P&L account, it is better you recognize the government grant also as income. These expenses are incurred to satisfy conditions for government grant. So to get government grant, you have to incur costs. And when these costs are debited to P&L account, it is better you amortize government grant also as deferred income, is the argument. Okay. Next, government grants are receipts from a source other than shareholders. See, the amount which you receive from shareholders, we credit to equity. But government grants are not received from shareholders. Hence, according to few people, government grant should not be credited to equity directly. It should be credited to P&L account, and from there it can go to equity. Okay. Next, income taxes, other taxes which are, we can say, paid by the government because of the fiscal policies of the government. We pay income tax, we pay other taxes because of the fiscal policies of the government. Government grant is also an extension of that fiscal policy. So similar to income taxes, other taxes which we debit to P&L account, government grant should also be treated as income. That is the argument. So fiscal policy, because of fiscal policies, we pay income taxes and other taxes. We are showing them in P&L account. So why not government grant, which is also an extension of the fiscal policy. Hence government grant should also be credited to P&L account. That is the argument in favor of the income approach. Okay. Widely followed, the International Accounting Standard 20 and Indas 20 are in favor of the income approach. So we cannot use the capital approach. Whenever we receive a government grant, we have to make it into deferred income and gradually release it to P&L account in proportion of the expenses which are debited to P&L account. And these expenses are incurred to fulfill those conditions, okay, attached to the government grant. So we are in favor of income approach, not the capital approach. Okay. Now let us see the disclosures. The accounting policy adopted for government grants. So what is the accounting policy you are adopting for government grant? Whether you are setting it up as a deferred income, what are you doing? You have to describe that accounting policy, including the methods of presentation adopted in the financial statements. See, there can be various methods of presentation. We discussed in our earlier lectures. When you receive a grant with respect to revenue expenditure, then in such cases, expenditure minus government grant, net amount you can show in your P&L account, or expenses gross amount, grant gross amount can be recognized in P&L account. So which method of presentation you are following, you have to disclose in your notes to account. The nature and extent of government grants. So what is the type of government grant you are receiving? How much amount of government grant you have recognized in financial statement has to be disclosed. So nature means what is the type? Why have you received the government grant? For what purpose? And to what extent you have recognized the government grant in your financial statements. Then an indication of other forms of government assistance from which entity has directly benefited. See, in our earlier lecture, in our earlier discussion, we discussed that there can be certain situations where we get government assistance which cannot have value placed upon it. Like government gives you free technical advice, government gives you free marketing advice, or government is giving you guarantee, or you are supplying a part of your output to the government. The benefits cannot be measured and recognized as government grant. In such cases, you have to disclose that we have got certain benefits by dealing with the government, or because of technical advice, marketing advice, or government guarantees given. So you have to disclose that fact that government has given us some free technical advice, or government has given some marketing advice to us, government has stood guarantee for us. So that information has to be disclosed. Okay. Next, unfulfilled conditions and other conditions attached to government assistance that has been recognized. So if there are any unfulfilled conditions relating to government which have already been recognized, those unfulfilled conditions have to be disclosed as part of notes to account. So this was the requirement of the standard with respect to the meaning of government grants, recognition principles, scope of the standard, exclusions and disclosures. Thanks a lot.